In this video, I'm going to give you a couple of things to consider before you make the decision on whether or not to get into a coin in a metaverse protocol or whether to get into NFT land in a metaverse protocol. Now, most metaverse protocols out there will have the option to get into both. Obviously, they will have some sort of a coin related to the ecosystem, and a lot of them will give you the opportunity to purchase land in that space. So this really does apply to those, and I would say that any metaverse play that you're looking at, having land at this point as a saleable option, especially on the secondary market, is a really important factor that I think most of us are looking at, and ones that don't might be a little bit harder because they just turn into video games. But land purchase in a metaverse space has a lot more wide prospecting sort of from an investment standpoint. It has bigger sort of connotations and potentials there. Now, the first thing you need to really ask yourself before I get into the major considerations is, what are you doing this for? If you're just doing it to make money, that's going to be one way to guide yourself, right? You're looking at it as a speculative asset, just like you would anything in the real world. You just want to make money. That's going to guide you one direction and will really tell you right off the bat which one of these considerations you should jump towards. Now, if you want to perhaps get into the project with the potential to make money as a side benefit, but really you don't want to miss out, say, if a project launches and at first you weren't sure about it, but then you really realize you do like it later because there is an ecosystem that's really booming, perhaps you want to play in it and you would actually like to test it out, then you may be a little bit more guided towards this direction, right? And this, I would give a perfect example, is sand. I don't really have any affinity towards the sand protocol or the metaverse that it has, but I did see an opportunity to purchase some land very cheap. It was my first introduction to the land NFT sale, and boy, do I really wish I just got in because I wanted to play in it. Not from money standpoint at all, but now I've been priced out and I can't make that decision easily without making it a major investment. So those you should kind of make decisions beforehand, but that really leads us to the first major consideration when it comes to deciding between an NFT land space or the coin, is that's going to be liquidity. Liquidity really is the absolute major question you need to ask yourself pretty much before you get into any investment, honestly, because purchasing almost any investment opportunity that's presented to you is easy. Generally, there's an opportunity and it costs money to get into it. That's right, that's kind of how you invest. But it's getting out that's really going to determine whether or not you can make money or make the money that you expected to make, as long as there's a timely return on that ability to get out of it. So if I can purchase something but nobody wants to buy it, it's not going to be a great investment and there's no liquidity there, therefore meaning I can't get out of it. So I'm holding on to this thing whether the market's taking it down or going up. So liquidity really is a really big factor in investing, period. And I think is going to be the major decision you need to look at before getting into a coin or getting into the NFT land, because the coin or the actual ecosystem token is going to be the largest liquidity pool available to you because those are traded on a centralized exchange or a decentralized exchange. And that liquidity that's put up on an exchange is going to be a lot easier to get involved with. Now, I'm gonna put us over to a screenshot so I can just give you a visual representation of what that liquidity looks like. And you can see it here over on the pricing over on the right side and how it's continually ticking and going up and down. It shows that there's a lot of people actively there. We can actively see sales and purchases happening in real time. And the thing is that whether or not the market is going up or it is going down, there generally are people out there looking to buy the dip, looking to sell the high. There are always, not always, there are more than likely going to be more people in this place trying to make money, if you're again making that consideration for making money on an exchange, than there would be, say, inside of the real estate market. Now, the equivalent we want to look at in the real world would be stocks versus real estate, right? I think we can make that straightforward assumption that if we're talking about stocks and real estate, we're comparing coins, tokens, and NFT land purchases. Now let's think about a stock. I can go in and purchase Microsoft right now, and I could probably sell it tomorrow for whatever the difference is going to be very easily. If I was to purchase a house, there would be a much larger period of time in between purchasing and selling, even though NFTs don't have that same sort of purchasing time. But you gotta make a consideration of, like, if I put 50, 60, 80, $100,000 into the down payment of this house, how easily can I get it out? And you can't necessarily. This is where we come back to actually purchasing NFT land. Now, if I take a look here, you can see the marketplace. This is like Zillow, right? This is like looking at houses on the land market. and you can see the availability of them being here, but it doesn't mean they're going to be sold anytime fast. You know what I mean? It's like this thing I've set to purchase now on the, but it's been on the market back and forth. It's in the buy now category. This isn't a bidding one. It's been sitting there for 2 days. There was a transfer 2 days ago, and this person seems to have listed it. So they've at least been waiting for 2 days, which makes you kind of go, oh, if it's crashing, say for instance, the market's crashing heavily and you want to get out now, you can't. So I would really, really point to liquidity being one of the major parts that you should look at for this. And I know that for some really, if you've been investing for a while, this is pretty straightforward, but this is kind of for the newbies out there. This is for people really trying to think about what's going to be best in the long term. If you potentially think, hey, there's an opportunity, I put $10,000 into this, into say a land sale, but I may have an accident down the future, you need that money, you can't get it out. So it comes down to sort of a risk reward sort of thing, or whether or not you're putting in money you should be, or you can lock up and just say set and forget and don't care about. Okay, so liquidity is really going to be one of the major factors that you should consider whether or not you want to get into the token, coin, or the NFT land itself. The second consideration you need to think about before getting the token or perhaps the NFT land is the volatility and any associated mean average pricing, because really this will have another weight on your decision making when it comes down to those purchases. Now let's take an example again of perhaps the stock market versus real estate. When you go to get into the stock market, there's obviously volatility there. It kind of comes hand in hand with the liquidity. But when you look at the real estate market, the same particular house isn't got the same sort of drive that would have like the liquidity because of people. Therefore, they have a slower sweep when looking at the charting pattern. When you actually look at sales of homes, even though they can crash, and we have seen examples of crashes happening over short periods of time, we wouldn't see a crash like that could happen in the stock market happening in a day or less than a week. The stock market generally takes weeks, months, and years to show results in a specific direction. Again, outliers of crashes happening, you still do need to consider generally sweeping motions when it comes to those. And here's the kicker. When the volatility is considered not just as the asset class as a whole, so kind of stock equivalent, crypto exchanges, liquidity, you're thinking real estate versus NFTs, that's the same sort of ball over here. They are based on another protocol, right? Another protocol or another coin that underlies where that NFT was purchased. Say Ethereum on OpenSea or Polygon or Solana, where the NFTs can be created. They have a base level of volatility associated with them. Because if we compare, say, Ethereum to Polygon, which is an altcoin of a lower market cap, they have higher volatility. These lower market cap altcoins have higher volatility than even Ethereum. And we have to call Ethereum technically an altcoin because that's technically what it is. But as we all know, Ethereum being sort of like number 2 slot to the king, Bitcoin, when he does a 1-to-1 sort of move, he goes up and he comes right back down. Ethereum potentially could do a 1.5 times to 2 times up and come back down. Whereas those altcoins are looking at those 5 times gains, those real low micro caps or even lower, like, we're not talking $1 billion market cap. We're talking about them having a much higher sort of up and down reaction too. So that volatility is compounding on the fact that it's also an NFT, right? Which kind of has a connotation of people as land, real estate purchasing. So it really starts to make a little bit more impact when it has that compounding effect as it does in the crypto world. In real estate, it's for dollars, right? And you're purchasing this major thing. You just kind of have to consider the one whole thing, although it still does have that more sweeping pattern on the charts as far as like what the average pricing does. The one other thing I would talk to the mean average pricing of those sort of things is that on real estate, I'd see NFTs having the same sort of result over time, a slow gradual upward trajectory. That's generally what we see in that sort of pattern. We can go over and we can actually take a look here. Even though we are still talking about the crypto world, you have to remember this, and I am on a 90-day period, so we're gonna see some of those bumps. But the average sort of like up genward trajectory is what we see. This is nowhere near what we kind of see in the crypto market, right? The volatility here is crazy, even though, and we're looking at a much higher, longer time frame here. We're going way past 90 days, right? So let's actually just do a quick experiment and see what would have held best on a project that already went through this, and see what would have been best if you got the land or the coin in itself and see the run. So I chose to use Sandbox because, again, it's recent, it's recently happened, it's something I was already watching, but it also has a nice little little time horizon on it where I can look back to early 2021, say in February, and kind of get a little range that goes through a bull run, shows the volatility, and actually sees what happens if we pick and make a sale at the highs, the all-time highs. What's the comparison? Which one would have just ultimately made you more money? So let's just do that raw comparison right off the bat. So to start off, I chose, again, like I said, Sandbox, and I managed to come across this little piece of land here, which is up for sale on OpenSea. It actually was minted in February 11th, but it was first on sale right here on February 27th for 0.29 ETH. So I need to take in consideration here both ETH price and Sandbox price, which I ended up going across and looking at the Sandbox price, looking at February 27th here, and then I ended up, or that was the Ethereum, yep, and then I went to look at the actual Sandbox price. So I took these numbers, and it's somewhere in here, and I ended up looking at the all-time high, comparing it to if I got out right here. You perfectly time this, right? The coin you're looking at, you perfectly time the very top. So I used this top here, which was at 8.4. And I quickly did some math, and I don't need to bore you with the whole thing through here, but let's just walk through it and show you sort of what's gonna end up happening. So if you bought it on February 27th, you bought sand and land for the same amount. This is the current price that it was at, or that this was the current price at the time. This was what's listed on that exchange or the coin market cap. And in order to get there, because we're gonna do an actual one-to-one, you spent the same amount of money, right? 0.29 ETH at that time would have been the equivalent of $410. Therefore, we have to convert our sand into $410. So in order to get there, we basically buy 1,881 shares of it. So we have in one hand, 1,881 shares of Sandbox, and in the other, we have the NFT land, which we purchased for 410 bucks. They're the same, right? We turn around and made that decision. So on November 24th was the absolute peak that showed on that chart that Sandbox actually made it to. And so if we sell on that particular day at $8.40 times the 1881, we would end up with 15,800. I think there's a few change in there, but I think I just wrote this nearby. We take off 410. We ended up with about 15,400, okay? And as you can see, you've got eyes. When you did the land, it was the equivalent selling price at this same period of time for 3.5 ETH. It would have been at this price for Ethereum would have been 4,274. This would have equated to about $15,000 minus your cost basis of 410. Sand wins. This is the winner right here. Done. It would have won out. Now, first things we're going to notice here. It wouldn't have won out by much. It's a small amount. So we're talking 14,500 versus 15,300. So we're really talking about a little bit. But the first thing I will point to is that if you wanted to sell the land that day, you would have needed a buyer that day who absolutely thought that was going to purchase. Now, because it's going parabolic, that possibly could have happened. But let's say you're a day short and it's going down. That might have been harder. And say you're another day short and it's on the downside again and it's going even further down. It might be continually getting harder. So that's the first thing I would point to, going to the liquidity as that major point there. The second part is talking about kind of the volatility to the whole situation. Is if we look back at it, we can see that the price change is correlated to two different assets in this particular case. It won't always be, say if you were comparing Ethereum to an Ethereum-based NFT, but a consideration you need to think about is going to be the fact that the NFT itself is on a different protocol and is generally purchased in that protocol's asset. So the fact that Ethereum sits in a different volatility class than your lower altcoins, and this is something you should really start to realize, is that altcoins move at different speeds to each other, right? We already know that. Bitcoin moves, it's the leader. It takes everything where it's going to go. Ethereum follows it as sort of the queen to the whole situation in a tangible altcoin sort of manner, and we're going to call it an altcoin because that's technically what it is. But all the other moonshots, all the other smaller coins, anything under that moves in a completely more volatile manner. If we see a 1 up and down on Bitcoin, we generally see a 2 or 3 up down on Ethereum, and then we're looking at 5 to 10 time volatility in those micro caps or in those other smaller places, especially at Sandbox when it was in that lower cost price. So you have to take into consideration, first off, the fact that the NFT world moves in a slightly slower pace itself, but it's also wrapping the different asset class, which we already know has a little bit more of a sweeping pattern anyway, or at least it doesn't have as hard of a drop. And so here's the thing that I will point to right after this, is that if we look at what would have happened if you sold this today, this is what would have happened if you had sold this today. And as I'm making this, I'm sure I'll post this a few days later. This might have changed slightly, but you can see the general rule of thumb here. So let's say sell today, Buyers, February 27th, and sell today. Let's just pick the date that this gets posted. Look at that roughly. Sand would have actually lost you money, or would have gained, you would have still gained money, but you would have only gained 6,700 instead of potentially close to 10,000. So that's a bigger difference. And really all that was the result of was holding a little bit longer. Was you waited a little bit longer, you didn't time it perfectly, and you said, oh, I'm gonna see if I ride this out, and you started to say you couldn't sell your NFT and you wanted to get out. But over time, you realized that coming back out of it and say you really needed to pull out and you had no choice, you could have still walked away better off than if you had been on a completely crash course, holding that coin way past its sort of all-time high. So the volatility is interesting here because, like I said, it doesn't just apply to the top layer, which would be like considering the NFT space as like real estate. You have to look at the underlying asset, and being the fact that NFTs can be put on different networks. We know Solana, we've got our Polygon out there. There's other ones out there, but those are a few of the notable guys. And Ethereum, of course, you have to consider that underlying asset's value that will go up or down because generally that's what they're traded on. So you kind of have to do this inception when it comes to thinking about the asset class they're on, and goes back to why you're thinking about the volatility, because it goes into the layers of what's the supporting fundamental of that NFT, not just the liquidity. It combines the two and gives you time on that. If you look at the time horizon of this, as I said, this is a downward trajectory that would have benefited you here. You may want to make that consideration. Say you're buying the land and you really have no care what it does. You could benefit in this situation where come down the road, say maybe even the next bull run, obviously they could both potentially make you money. If the project's doing well, there's a good chance the coin is going up, and so would the land. But you could have used the land, and maybe you could have even leveraged it in a different way, especially in some of these projects. You could have put them in and actually rented the land. You could have potentially put some other NFTs on top of them if you're in a project like Remark. So there are other options to look at. But from a standpoint, let's go back, let's do a full overview. From a standpoint of just quickly making money, just sticking with it and keeping it simple, probably the coin. It's gonna be the easiest result for you, and it's gonna have the highest liquidity that's gonna allow you to get out of there fast. You have to play to the strengths of the volatility, otherwise you can get wrecked. But knowing that ahead of time, you can make the right decisions that are best for you, and if you do need to get out, get out. The NFT is really going to play to the strengths that would be a lower volatility and ultimately having an NFT in a space that you may want to use. From a speculative standpoint, I feel like the NFTs are really for flippers. They're on the one-day flips, and they're really about getting projects early on and hopefully flipping it in near time while we're in a bull market. I don't know how they're going to fare when we come into this the bear market. I haven't really seen much results from that. We're just kind of like teetering on the edge right now. But that would be more things that you could, if you don't care, then maybe the NFT would be the answer for you, because you kind of have almost, you have something. You have something maybe a little more tangible than just say a bunch of sand or a bunch of network or Remark, right? You just have a bunch of this coin. What do you do with it? You got the NFT. So I hope this made sense and was of benefit to you. There was a few concepts I threw around in there, those two fundamentals being the most thing that you should really consider it. I did have a conversation, and this was the reason that I brought up the question, is I had someone watch my network video and was like, which one would you pick? And I realized it's not quite as easy as it looks. So go ahead, think about it, do your own assessment on your own finances, how this would affect you, and take those two things into consideration. You're probably gonna walk out less disappointed or even happy that you made the right decision for you once you think about those two main things. If you did find value here, you know what to do. The like button, it really does help. Hit subscribe if you want more questions like this answered. I do news, I also do reviews, so hit the subscribe if you want to check out some more of that. And guess what, guys? I'll probably see you in the next video. Or maybe it won't, maybe it'll just be this camera. I don't know, we'll see.